Great. Welcome to Digital Asset News. Take a top stories in crypto, break them down into bite-sized pieces. So today, this is the big story. And we've been talking about this for a while, and finally it's going to happen. We've got Simon Dixon here from Bank to the Future, and he's going to help us understand what this is as far as a Celsius recovery plan. So we're going to go over a lot of things today, so just stick with us. The first thing we're talking about is who is Simon Dixon? Why is Bank to the Future, his company, even taking part in this? And a little disclaimer. Also, the big question, how do we get Celsius to users' money back? I think that's what everybody's here for. Also, we're talking about what have you done so far to try to help Simon and the company. Then we'll talk about what's a bad result, what would you consider a win, and then what's the next step? Because we can talk all we want to, but we got to take action. We got to take action fast, and that's what the plan is. And then we'll finish up with a little final thoughts, mental health, and we're going to take your questions that you submitted to Slido, which we have over 260 or 300 upvoted to the top one. So first one, Simon, first of all, thanks for being here. I know you recently lost a family member. I know it's a very tough time. So thanks for taking the time out to do this. This is going to help a lot of people. I really appreciate it.
Okay, yeah, obviously I really wanted to give this interview to you because I think, we did some interview about 3 months ago. Firstly, I just got to say, I've got like a lozenge in my mouth, if that makes an annoying noise. My throat is dead. This is not ideal conditions. I've been, mourning the loss of my father. But the DMs just got so heartbreaking that I just needed to do something because I knew I could. So, that's really the situation right now. This is less than ideal. That's really the precursor to this. But many people are asking for interviews, but I wanted to give it to you, Rob, because I think you've been doing the most for the community. And I think it's deserved.
Well, I'm trying, my man. I'm trying. And then also, I just want to say to everybody that we've got 3 screens up here. We had a little issue technical. So you're going to see the video of Simon as he's hanging out in the nice background. And then the audio is coming from a better source. So Simon, let's get down to it. Your time is valuable. My time is everybody's time is valuable. Who are you? Who is Simon Dixon? And why is Bank of the Future taking part in this? And any disclaimers you want to throw out there before we get going?
Yeah, sure. Okay. So I gave really an overview of me, the past, present, and future of Bitcoin. I was involved in Bitcoin from speaking at the very first Bitcoin conference in the world, writing the first published book in the world to include Bitcoin over a decade ago, Bank to the Future. And before my life kind of went into turmoil recently, I was writing my next book on the future of finance and surviving the Great Depression of the 2020s. And so the reason that I'm here and talking about this right now is because I am a shareholder in Celsius. The company that I co-founded, banktothefuture.com, is the longest standing company in Bitcoin, and it's the world's first crypto securities business. We funded over 100 different companies from Kraken, Bitfinex, Bitstamp, Coinbase, Blockchain.com, Circle, some of the largest names in the industry. And we also did a funding round for Celsius, the Series A. So that was really my first involvement. And what I do want to say in everything that I talk about today, firstly, I'm not actually a lawyer, but I paid tens of millions to lawyers over the years, surviving every single regulatory crackdown that we've had so far in crypto over the last decade. But I'm not actually a lawyer, so you can't take anything as legal advice.
Right.
I'm not a financial and investment advisor. I have done all my qualifications. I used to work in investment banking. I was actually a qualified financial advisor, but I'm no longer registered to give investment or financial advice. So nothing that I say, in my opinions, about what I'm saying, it's about purely what do I want for my deposits at Celsius and my shareholding at Celsius. There is going to be tax consequences in what happens here. I'm not a tax advisor, so I just got to say that. Right. And I don't work for Celsius. I was offered a role on the board of Celsius, but I am not a director of Celsius. I'm not an employee of Celsius. I am, I believe, from my understanding, one of the top depositors at Celsius. I've always taught diversification. Approximately 3 years ago, I released a video series on retirementplanb.com where I shared live how I'm investing because I was forecasting a Great Depression. Everyone thought I was crazy back then because the market didn't go into a depression. But I was trying to prepare everybody for inflation, deflation, economic decline, economic growth, bank failure, wars, pandemics. and how to be okay whatever happens, including crypto and Bitcoin bear markets. So part of how I invest is diversify. And so I try to prepare for all outcomes. And one of my strategies is yield. So I had a percentage of my wealth on Celsius as part of my yield strategy.
Right.
And I published, the rewards that I was receiving to be transparent about that. And I also own shares in Celsius. So when this disaster happened, I was forecasting a yield and DeFi crackdown. And letting people know that the next boom market from this, after a yield and DeFi crackdown, would probably be a securities boom. And that happened sooner than I thought it would happen. And obviously my deposits were on the line, and my shareholder value was on the line. And I knew that I could try and do something about it. And all of a sudden, the direct messages just started coming through, and they were heartbreaking. I started to realize that people had actually put their entire life savings in Celsius.
Right.
And people were dependent upon Celsius for their retirement and their financial future. And while I cannot do anything about that, by the end of this, I'd like to really give some tips from someone that's been completely broke, somebody that's lost their life savings and retirement in the past. And I'd like to cover some of that as well. But really the main topic I'd like to cover is what can we do about Celsius? So who I am, I'm a depositor, I'm a shareholder, I've been involved in the industry, I deeply care about this industry. I do believe that Bitcoin is going to play a huge role in the future of finance. And I do believe we need an exit from the traditional financial system. I lean more to Bitcoin than alternatives to Bitcoin. But I also diversify in order to prepare for any outcome. And one of the outcomes that I need to prepare for is Bitcoin failure. And so that's one of the outcomes I prepare for. Even though I don't believe it will happen, I always invest in maybe me being wrong.
Gotcha. Okay, so that covers the big stories or the big parts of it. Who's Simon? Why are you guys involved? And a little disclaimer. So now let's get to the bigger question. How do we get the Celsius users' money back? You got a bunch of DMs, I got a bunch of DMs, messages, heartbreaking. And we talk about only investing what you can afford to lose, never leaving too much on any one exchange. We have the rules right there. But people get ahead of themselves. We're human, right? So now we got a lot of people stuck. Simon, how do we do that? What's the plan going forward? So how does this all work out for Celsius users, depending if you got 3% like me on the portfolio of their portfolio on Celsius, or like 100% like some people?
Yeah, okay. So the first thing is we can look back in history. Having been involved in this industry for over a decade, we've been here before. So the first time I experienced this was when I spoke at that first Bitcoin conference. It was sponsored by a company called Mt. Gox. And Mt. Gox had pretty much 70% of all the tradable Bitcoins on their exchange. They tried to get out of, they created a bull market, and they created a bot to try and trade their way out of a hole, because Mt. Gox purchased an exchange from the creator of Ripple. And that exchange was missing 80,000 Bitcoins when Mark Capellas bought it. They then got hacked, and they were missing a lot of Bitcoin. So essentially, they became inadvertently a fractional reserve bank without having a license to do so. And so we've got that experience to go by. What we do know is that they did a few things right and a few things wrong. Some of the things they did right is that they didn't sell the Bitcoin. They kept the Bitcoin. Okay. And it moved into bankruptcy and liquidation. And 8 years later, there is $1 billion of Bitcoin. So it went from being bankrupt to having hugely valuable assets in dollar terms. And it's still at this moment being resolved 8 years later. And a company that I invested into was a small startup at the time called Kraken. And Kraken was the company that put together a plan with the liquidators in order to try and unwind and support all of the depositors in seeing what they could recover and what the financial situation was. So that was wave one. That took us from Bitcoin, up to $1,300 and crashed us right down again to $250. Then we had a sideways market where we tried to reconcile that, and we moved into another one. The other situation that I was directly involved with was we were in a sideways market in 2016, and Bitfinex lost 119,000 Bitcoins as a result of a hack that was recently recovered from the Crocodile of Wall Street. You can follow that story. And the situation there was that they didn't want to follow Mt. Gox. They learned from Mt. Gox, and they put together a plan that we were involved with that we can go a little bit deeper in.
Yeah.
Where they haircut users, they gave them a token, and that token represented a debt. They traded their way out of the issue. They repaid some of the debt, and people converted it into equity, which later went 16 times up on banktothefuture.com, and paid out hundreds of millions of dividends. And they got a right to all of the billions of dollars of Bitcoins that was later recovered many years later in this year, actually, 2022. So Bitfinex used financial innovation, and really it was comparing those two different stories. And people get this confused as well, because Bitfinex had two disaster recoveries. We did the equity part of that. The second one was when $850 million was seized by the government from one of their banking partners for Tether. And they had to issue $1 billion of a token in order to recover the funds that the government had seized as a result of that. And that was the Leo token. So people get confused. The first recovery for Bitfinex was called the BFX token, and we can go a bit deeper into that. The second one was called the Leo token. They both worked, and they both recovered as a result of it.
Perfect. So yeah, let's dive deeper into that, because there's a big distinction between what happened with Mt. Gox. They kind of went a TradFi way, got a bunch of lawyers involved, and now we're 8 years out. 2014 hack, I believe, right? 8, 9, 10, 11, 12. So we're coming up on a decade, and we're still in flux. But now we're talking about Bitfinex and how it works. So walk us through those distinctions you just talked about.
Okay. So Mt. Gox went into bankruptcy, went into years and years and years of lawyers, paying lawyers millions, TradFi route. And eventually the price of Bitcoin went up because there was one very fortunate thing, which is that the way that the proceedings worked in Japan meant that they didn't have to sell the Bitcoin. Bitcoin went on a bull market for years and years and years. It was a forced hodl. There was hard forks with Bitcoin Cash and Bitcoin SV and all these other ones. So they were able to sell off some of the hard forks, and they kept the valuable asset, which was Bitcoin. Now, the liquidators played it very well. If you move into bankruptcy proceedings, essentially, you're relying upon TradFi's belief in Bitcoin.
Right.
And traditionally, they are very risk adverse. Now, Japan was the only country in the world that was supporting Bitcoin regulations. It was the highest level of merchant adoption in Bitcoin. And it had a very different mindset, without being stereotypical, but, they have 100-year games plans versus 3 to 5 year game plans.
Yeah.
And that was a stroke of luck that made that work, but it still took 8 years to get the funds back. Okay. Yeah. So that was number one. With Bitfinex, they had to move really fast. And this is my original approach to Celsius. And I'll go through what we actually did and how we approached them.
Okay.
You have to move really fast, because the longer you go on, the more FUD comes out, the more bad PR comes out, the more predatory offers comes out, the more the community stop believing in what they originally believed in. So to give you context, from the moment that Bitfinex was hacked, they were immediately the enemy of the world. Everyone was, give me my money back. They were scammers, take them to prison, all of that stuff. But they set about releasing, after 2 weeks, some press around what they were going to do. Within a couple of weeks after that, they executed it. And essentially, every advisor would never have advised them to do what they did, but they decided we have to find a way or make a way, and they did it. So here's what they did.
Okay.
They realized that, so they took the value of the Bitcoin. 119,000 Bitcoin at the time was valued at $72 million. Now, $72 million compared to hacks that happen today is a reasonably small number, but back then it was a disaster number.
True.
72 million in our industry back in 2016 this is before the ICO boom. This was a big hole, a really big hole. And what they said is that $72 million is the value of what we can't repay. So they opened up, they allowed for trading, they allowed a bunch of people to withdraw and get the rest of their money, and they were haircutted by about 33% of their deposits. What they did is they then issued a token, and that token was called the BFX token.
Okay.
The BFX token was essentially a security. It was a promise to repay $1, and there were 72 million tokens. Those 72 million tokens, you could either sell them on the market if you thought, I want out of this shit, I don't believe Bitfinex, I think they're a bunch of scammers, I'm out. And so you could sell it, and immediately it started trading at about 30 cents on the dollar. But somebody else said, I believe Bitfinex can recover, I'll buy that $1 of debt for 30 cents. And so immediately that's what happened. This is very different to just issuing a token like Luna or something like that. This is a security, it represents a debt. And in accepting that token, you had to agree not to sue Bitfinex. So if you wanted the recovery, then you had to give up your right to sue. And most people accepted the token and decided that that was the route forward. Speculators came along and said, well, I'll buy it up. I believe that Bitfinex has a future, and it became a prediction market for the likelihood of Bitfinex recovering. Now, as the 2017 bull market came along, a stroke of luck came along, Tether started to get traction. Binance was launched, and Binance didn't have any banking facilities, and it used Tether as its pretty much a crypto to crypto exchange.
Right.
And Binance became huge because it didn't need to get banking and essentially used Bitfinex and Tether as their bank account, which led to the later issue that arose the second time round. But anyway, Binance grew because of that. They didn't need a banking, and Bitfinex and Tether took on that responsibility. The market recovered. They started paying down the debt. They also said, if you want to convert your token, no matter what the price of the token is, even if it's trading at 30 cents, we'll give you $1 of equity at a set valuation in the company. And so we launched a pitch on Bank to the Future, and Bank to the Future is a securities company. And so people were buying tokens at 30 cents and converting them to $1 of equity. So they were getting a 70% discount on the valuation of Bitfinex. Now, as more and more people did this, they were buying it for 30 cents and then converting into equity at $1. The price of the token started to come up. It went to 40 cents, it went to 50 cents, it went to 60 cents. And more people realized, and then they started repaying more of the debt. And then approximately $50 million, about 55 million, I think the final number was converted into Bitfinex equity at $1, and people could either buy that at a discount, and they got a deep discount in the valuation of Bitfinex.
Gotcha.
This created that prediction market. It allowed people to make their choice between a token, debt, or equity. And then the 55 million that was converted to equity went on the Bank to the Future secondary market. The $1 went up to a price of $16 when it hit at this peak on Bank to the Future. So there was a 16x upside on the equity. And there was also, they took all of their profits from the whole bull market that happened in 2017 and 2018 and paid it out in dividends, which was, to the tune of hundreds of millions throughout that time. And they also gave people the right to, if the hacked funds were ever recovered, you would get your piece of that. And that was really the first recovery story. It worked well because people acted fast, people were given choice, and the market recovered.
Gotcha. Okay, so that's a good lesson as far as like the history of what's happening. So then that leads me to, actually we'll have to back up and kind of talk about that. So are these the ideas that you guys are having to move forward potentially with Celsius? And not that this is actually happening right now, of course, there's a lot of things in talks or in flux, but is that some of the of the rationales of what you're trying to do here, or you would just put out a Celsius recovery plan, and it was all about the 3 proposals. So do you want to get into that now, or do you want to just give like a brief overview of how the Bitfinex is or is not some of the proposals you're trying to do now with Celsius?
Yeah, so when we were putting proposals forward, we knew that, so there was a few things. Firstly, we thought traditional finance are going to take it down the Mt. Gox route, but they might take it even worse. They might sell the Bitcoin. They might sell a lot of the cryptocurrency, causing a further crash in the market.
Yeah.
They also would take a risk-adverse approach. So there's 3 issues with Celsius that we were trying to find solutions for. The first is disclosures. So the challenge that I was putting forward is that Celsius was sold in the wrong way from my perspective. It is my belief that the yield product is a security. We know that because BlockFi just settled 100 million with the SEC, and all of the yield platforms, there's no were in challenges around whether there was publicly disclosed things. Here's the challenge with this: we were working on their funding round. NDAs have been signed. I'm trying to make sure I give as much information as possible, represent the right solutions, without breaching some of those NDAs and creating legal trouble for myself. But sometimes you just got to go for it because the consequences are too disastrous if you don't go for it. So that's the situation. So disclosures. I believe that the yield product is not a low-risk savings account. It is a high-risk security. And that became apparent when the bull market ended. And so many people took money out of their bank, bought stable coins, thinking it was a different type of risk. So it's not a low-risk saving account from my perspective. So I believe that was sold in an incorrect way. And instead, it is a higher risk security. That means that when you invest in a higher risk security, you need to comply with securities laws. Now, people hate compliance, they hate laws, they claim me of being a lover of regulations and all sorts of stuff. There's only a reason why Bank to the Future survived the decade, is because I personally believe there are good regulations and bad regulations. Good regulations are investor protections. So when you're dealing with a centralized company, it's good to have checks and controls on that company, because there's all sorts of things we have to do. Liquidity requirements, audit, transparency, all sorts of things that are involved in investor protections. Other things are suitability. Anyone that signs up at Bank to the Future, we have to test that they understand the product. They have to actually pass an online quiz showing what happens if they issue more shares. What happens if I lose my money? Should I be investing in all my money in one thing? So you do a suitability. None of this was how people invested. So I believe that they had a deep misunderstanding of the product. And so disclosures, transparency, all of those things need to be addressed, because is this a security or is this a savings product? That's a question that needs to be answered and addressed if there is a recovery. The second one is regulations. So Celsius was originally started as a peer-to-peer system. They said, you put your Bitcoin in, and then we'll take that Bitcoin and we'll lend it out to somebody else and we'll pay you the yield. That was the peer-to-peer model. In having that model, there was a reason why it was a peer-to-peer system, because it's treated differently from a regulatory perspective when you do peer-to-peer. If you then start making investment decisions, it's more like a security at that stage, because you're investing in the ability for a fund manager to make investment decisions. But every bit of money or crypto that goes into Celsius, if it's backed one-to-one, then it's more a security at that stage. If, however, it's not backed one-to-one, and some money got hacked, for example, that's the Mt. Gox scenario. At that stage, you're engaging in fractional reserve banking, and you need to have a banking license in order to be able to, lend out more deposits than you have. So, it evolved, as it were, what it seems, from a P2P model to a securities model to what looks like a banking model now, and therefore there is regulatory consequences. Now, what we saw with BlockFi is that they settled with the SEC, and they said, we're going to turn this into a security, which would imply that it's back 1-to-1 and it's not engaging in any kind of fractional reserve. If there were funds missing, and then it's a liquidity issue. So sorry if I'm dumping a lot on you, but there's a lot to cover.
Yeah, we got to go over all of it.
Yeah. So really, there's three ways of solving that, right? Either it's illiquid. If it's illiquid, then my perspective, again, not financial advice, is just wait it out. HODL, wait for the system to unwrap itself. SCETH converts to ETH when it moves to proof of stake, and you just simply wait it out. And unfortunately, there's reputational damage.
Right.
There's financial anxiety in the time that you haven't got your deposits. There's lots of lessons learned. But if it's illiquid, if nothing major happens with those investments, then eventually you should be in a position where you can slowly withdraw some now, more funds come in, withdraw more funds come in, withdraw more. And that's really the illiquid solution. There's a difference between illiquid and insolvent. Insolvent is when you actually don't have enough deposits to meet all of the demands, in which case everyone that's demanding for Celsius, give me my money back, there isn't the money there. And so you really have two ways of dealing with it when you're in an insolvent situation: Mt. Gox or Bitfinex.
Right.
And those are your two choices. You either say, I'm out, we move to bankruptcy. And then TradFi, lawyers, advisors all take over, and the board no longer have any decision making in that process. Bankruptcy is that solution. Insolvency is where you say, I believe we've still got something that we could do as a board. And so my job was to try and get those solutions in front of the board while they could still make that. My belief, speculation. I'm not a board member of Celsius. I'm not privy to the inside conversations. I believe that the board wanted to do a recovery. I believe TradFi wanted to take the conservative route. And I believe that's all based upon, not buying into the ethos of the crypto industry, not buying into the future of Bitcoin, trying to protect from certain issues and challenges, and really not the right things. So when we launched the webpage, which I think you'll be sharing in a bit, we tried to articulate some of these thoughts around belief systems become important here. I did not want my deposits to be put in the hands of TradFi and bankruptcy proceedings. I thought it was best for my deposits to actually do a combination of an illiquid solution for the assets that are liquid, and a financial innovation solution so that we can benefit in a very high risk way, like the Bitfinex, from any upside of what's left over. In order to do that, it required regulatory transparency, financial transparency, a willingness to move fast, to act fast, and to communicate and put PR there about the actual recovery plan. So this is when I came out. So what did I actually do? I was mourning my father's loss. I publicly said, I'm no longer creating videos. I've got other things I need to deal with. And so when I realized that this was happening, I silently said, right, you've engaged these advisors. I'll tell the advisors what I think they should do. And so that was my first approach. And I hoped that that was going to lead to something. When I realized that that was not leading to something, I then said, we can do it. Engage us to do it. We've done this before. We've got the experience. We'll take our entire team and put all of our efforts into doing what we think would be the best solution that we could come up with. We had a belief that our shares were worthless if depositors were not given a good solution. So our solution was focus on depositors, and then there'll be shareholder value. And if there's shareholder value, I don't own the tokens, then there may be token value, but my priority was depositors first, shareholders second, and then if there is a company, then the token might have something to do. But that wasn't really my priority.
Gotcha.
And so, yeah, that was, I wanted to avoid bankruptcy for that reason. So that was my advice. Now, when I realized that we weren't really getting anywhere, I started to detect speculation again, that there was a bit of a power play between what the board wanted and what the advisors wanted and what TradFi wanted. At that stage, I decided that the only thing I could do here is go onto Twitter. And when I went onto Twitter, I wanted to harness the community to let them know that there are solutions and that we need to unite and put more influence and pressure, because we have over 5% in the company, and we can call a shareholder meeting and force a vote. Again, not legal advice. We just believe, I've been moving as fast as we can, that we could use our shareholding in order to force this. And this is when I started to get an offer to become an internal member. And then I took the opinion that me being an internal member meant that I'd have to go silent. I wouldn't be able to support the community in the way that I'd like to support it. It would give me less influence to do what I thought would be right for depositors, which would then retain some shareholder value. So that was the point when I decided to go public and go on Twitter. And everybody was asking me, who the hell is Simon Dixon? What axe has he got to grind? Is he, a troll, an insider? I'm okay with all of that stuff. But I then decided I've got to go on digital asset news. I didn't want to do any videos. I wanted to use this time as downtime, but the community called, and the DMs just broke my heart, quite frankly. There is a human element to this.
Yes.
People were contacting me saying that they're suicidal. They don't want to tell their partner that they've lost all their life savings. And then really at that stage, it kicked into me. I have to push to the final hour and do everything within my power and influence in order to try and come up with a better solution. And that's where we are right now. I'll push to the final hour. We have certain tools, we have certain influence, we have a team of people. We've completed a year of due diligence because we were about to launch the Series B funding round for Celsius. It didn't get quite past the due diligence because of this, insolvency or stroke regulatory stroke liquidity issue, and that started to happen. And so, and people were asking us, why is this taking so long to do the next round? Well, there were these challenges, and and the stars and the moons were all lined up, and now everybody, I think, gets a bit clearer. I do also want to say that it's a very, very challenging thing for the board. It's not my job to judge here. My job is to come up with solutions. There's many things that the board did that I wouldn't do, but that's not for me to judge. I'm just here to try and get the best result that I can give, and use my experience to do what I think is best. And why do I care? I've got tens of millions on the line in deposits. If I lose those tens of millions, honestly, it won't make any difference in my financial position because I prepared for that. But there are people that have all of their savings, and that breaks my heart. They need to learn the lesson. And at the end of this, hopefully they can come out a wiser investor. But however, if we could do something to prevent that, that's why we're on this call right now. And so it was a human element that kicked in that made me want to come out.
Yeah, and that's huge. And then the big thing right here is, I will just say this before we move on to the next part, is the experience. So because you've had that experience with the Mt. Gox, with the Bitfinex, you can say, look, I can tell you what doesn't work, and I can tell you what can work, and I can tell you we can do a hybrid, or we can take a look at a new approach. And we're going to talk about that in a little bit as far as the 3 proposals. So to me, it makes a lot of sense. And that would kind of answer, how do we get the users' money back? We'll talk about that. And then what are you doing so far to try to help? The human factor makes a lot of sense. So here's the next question before we get to, the proposals and what we can actually do. What's a bad result here? And what would you consider a win? And that would be a win for, like you talked about, the depositors, the shareholders, the people involved in Celsius, and also crypto in general. So what would be something that would be positive? What would be or what would be just a big, bad negative?
Yeah, so from my perspective, and again, I'm talking from my deposits and not from your deposits, you have to make your own decision about what's right. And we'll have a way where you can express your opinion about what you think is right for you. But from my perspective, the worst result for my deposits would be that bankruptcy takes over.
Okay.
They sell all my Bitcoin, and they sell it at the bottom of the market. They create further downward pressure on prices from people that have no belief in Bitcoin. And then they take whatever decent asset Celsius has left and sell it to Goldman Sachs. That would be my idea of a worst nightmare. Now, I did do some, again, I know many people at Goldman Sachs. When the Goldman Sachs rumor came out, I asked all my contacts at Goldman Sachs and the people from the relevant departments, and I tried to bust that as just misinformation. Because all of the people that I spoke to at Goldman Sachs that will remain unnamed said that it was just FUD. It was just, there was nothing to it. So I take that for what it is. It doesn't mean that there's not a secret team working on this, or, I just take that for what it is. I try to bust that FUD. But I do believe that traditional finance want to get into this industry, and those that have banking licenses are perfectly positioned to take all of the decent assets. And as somebody that's been on the other side of many of the conversations that are happening with deals related to, I've got to be careful what I'm saying here, but there's many companies that have challenges right now. And I've been on the phone nonstop, and my team has been on the phone nonstop with all those companies and all those investors and all those people that are putting in solutions. There are really predatory solutions that are being offered right now, and I don't like them at all. And so I want the reason we put this whole hashtag Depositors first. I'm a karma guy. That's how I operate. I believe, Alex said some good things. I mean, he always used to say, do good or something like that. Don't quote me on what he used to say. But I actually do believe in that philosophy. That it does, what goes around comes around. So that's the worst result. Traditional finance assets strip it, and depositors get left with all the shit. And they sell crypto at the bottom of the market and create more downward pressure. It doesn't mean that they're going to do that. There is a scenario, as we saw with Mt. Gox, where they don't sell the crypto. And I hope that I'll use my influence if it goes into bankruptcy to try and push for that. But that would be the worst result. Yeah. The best result is that we transparently say, okay, this is not illiquid, this is insolvent. It's insolvent, here's the hole. Okay. And we put together a way for people through time, an illiquid solution for people to gradually and slowly withdraw their deposits as investments unwind. And then a solution, a high risk, a speculative solution using securities is put together for the whole to try and see if you can recover those funds. And there is still a company at the end of this. And the company at the end of this is either Celsius is a tarnished brand and a tarnished board, and therefore they hand over to another board and a brand that can take this on, that can deal with the regulatory challenges, securities, banking, whatever this is at the end. And there is an upside in that business opportunity that takes care of the whole, and some kind of merger, some kind of acquisition, and those types of solutions are put together to try and make depositors whole with the best effort, team that can do that.
Gotcha. Well, you know what? So let's just get down to brass tacks and talk about what that entails. So that's going to be the next step. This is where we take action. Talk is great, but talk is cheap. We need to do action. So here's what has been given to me. So there is this website. There's a link in the description. It's Bank to the Future, BNK to the future.co/Celsius. Again, you don't have to remember that. Just go in the description, click the right one. And there's 3 proposals. This is what the team has come up with from Bank to the Future. And Simon, I'm going to need you to walk me through this as we talk about each one. So here's the first proposal. This is a restructuring to relaunch Celsius and allow depositors to benefit from any recovery through financial engineering. This involves risks, and full recovery of funds is not guaranteed. I'll go with all 3. A pool of the most influential whales in Bitcoin to co-invest with the community. That'd be pool number 2. This is see the previous series, a fundraise when we completed for Celsius here. And proposal number 3 is an operational plan that allows a new entity, which we just talked about, and team to rebuild and make depositors whole. This again involves risks and full recovery of funds. So let's talk about this very first one here, a restructuring to relaunch Celsius and allow depositors to benefit from any recovery through financial engineering. What does that look like? What is a time frame? And what kind of risks are we talking about?
Yeah, so in terms of time frame, let me check. I got 20% battery. Hopefully that's not going to
We should be good.
Yeah. In terms of time frame, that's 100% dependent upon the board and the advisors and the internal flights that I'm not privy to at the moment. So that's the first solution, which is Bitfinex. The brand survived. The brand had a lot of damage. The brand recovered. And financial engineering was used in order to make depositors whole. My fear is that we've come too far for that solution. That was my first solution of act fast, communicate, put out press, tell people the whole, do the haircut, suck it up, and put together a plan and act fast.
Gotcha.
So that was proposal 1.
Gotcha. So let's move down to proposal. And it sounds good. Get in front of it, put out the fire, move forward, FUD's coming, make sure you stamp that out. Here's the second one, a pool of the most influential whales in Bitcoin to co-invest with the community. Previous Series A1, and you talked about Bitfinex in 2016. So talk to us about that, timeframes, those types of things.
Yeah, so you take the same approach in part 1, but immediately I got on the phone I've spent the last 11 years being a shareholder in many of the most influential companies in the Bitcoin and crypto space. I got onto the phone to as many of those as I could and said, would you be interested in participating in the recovery? It's not going to be a predatory one. It's going to be one that gives upside, reasonable valuation. And if you start investing, then we could see what we could do. So with the Bitfinex one, when there was 55 million, initially it was the big whales that came along and said, okay, we'll convert junk. And that gave confidence. And then the smaller people came along and we gave them a solution. We had a pitch on Bank to the Future. You could spend those tokens, convert them to equity. So immediately we had a bunch of people that wanted to participate in that. What I did find is that a lot of, there were some that were interested if we had more financial information and a regulatory plan that worked.
Right.
And there were others that were like, well, we're already putting together a predatory offer. And so there were a bunch of those out there.
Gotcha. Okay. So that moves us to proposal number 3. And this is what we just talked about. Operational plan, board gets reshuffled, put something in there with trust that allows a new entity and team to rebuild and make depositors whole. This also involves risks. What does that look like? Timeframes, if you got them.
Yeah. So again, this is somebody, so let's take, firstly, I don't give a shit if it's us doing the solutions or someone else doing the solutions. If somebody else can come up with a better solution for us that makes my depositors whole and my shareholding more valuable, then I'd back that. However, I do believe that Bank to the Future is in a unique position in that we already have a securities business. And for the last 2 years, we were working on how to do Celsius's business in compliance with securities laws. And we beta tested it with Celsius. And that was our retirement plan B portfolio builder solution that we were beta testing. If it turns out that there is no faith in the board, I know that there are a lot of people that still have faith in the board, solution 1, proposal 1, then great, if that's the solution. But if it turns out that somebody else needs to come along and try and get the shareholder value for the haircut, then we've been working on investment banking licenses. We've been working on a security solution. We have a competent team that's survived every single market like this. And we would be interested in supporting some kind of structuring that allowed the haircut shareholder value to try and get some kind of upside with the business that we built, or somebody else's business that's capable of doing that.
Gotcha. All right. So those are 3 proposals. Makes sense. We break them down into the easy pieces that they can be. So now it comes up to you. For everybody watching this video live, and of course the replay, this is where you come in. It's time for you to make your voice heard. So if we scroll down a little bit more, a little bit more and more, this is where you can vote and talk to us or talk to Bank of the Future about what you would like to see happen. You can submit it right here. The link again, banktothefuture.co/Celsius. You don't have to remember that. All you got to do is click on the link in the description and let your voice be heard. And that is the next step to take action. So, Simon, before we get into the users' questions, which everybody submitted via Slido, what's your final thoughts, especially on mental health, especially what's going to happen here?
Yeah. And I did want to end on that note because, it was heartbreaking receiving some of the DMs. You've inspired me into action, but at the end of the day, I can only do what I can do. And everybody needs to be mentally prepared for loss here. This kind of brings me into the situation that I was in before this. I was mourning the loss of my father, and my father, he was born in the Great Depression. He survived World War II, and he became a self-made millionaire and lost all of his money in the stock market in one go in the dot-com boom and bust in 2000. And I vowed to support my father in figuring out where his money went because he never understood where it all went. And in trying to build my business, I got deep in debt. At one stage, I was £150,000, which is about $200,000 in debt, plus a mortgage. And I went out to the first Bitcoin conference. And all I wanted to say here is that if some people are in situations where they feel like they can't even tell their partner about what they've done with the money and the life savings, and they feel like suicide's a better option. Those were some of the messages that I was getting. I just want people to know that there is always a way to learn and recover from these things. I've learned, I've recovered, I've made a lot of mistakes over the years. And there's, I've released a lot of content out there on my YouTube channel on retirementplanb.com to let people know that you should never be exposed to one outcome. And you can rebuild. You will rebuild if you take a proactive approach. You just got to expect, know where you are. I think the phrase that I've always said, expect the best, but prepare for the worst.
Yes.
Know where you are, plan where you want to go. And I'm talking long-term here. Most people vastly overestimate what they can do in a year, and completely underestimate what they can do in 10 years. And they end up, because they try and do it so fast, they end up in pump and dump scams. They end up making trading there, all of the things that we've always taught. What I want to say is that on my YouTube channel, once the dust settles, once I'm back, Rob's content, dollar cost averaging, all this stuff, learn, adjust, rebuild, and put together a plan for what you're going to do for the next 10 years. It is never worth taking your life for money. My father worshipped money. My father lost all his money. And his spirit lives on in me, because those lessons that he taught me led to many of the best financial decisions that I've ever made. And I just want people to know that whatever it is, there is a recovery. And at the end of the day, me and my father shared a special bond. I've obsessed over the subject of money my whole life. I've written my third book on the topic. I spent 2 decades from investment banking to crypto to Bitcoin to everything in between. But at the end of the day, it's your relationships, it's your love that matters. We weren't talking about money in the final days. We were talking about our love, our bond. And so it's never worth giving up your life. It's never worth thinking that there's no recovery from this. You are alive at one of the most interesting and exciting times in financial history. You get to participate in, have your say in what could be one of the most interesting recoveries or a very interesting, disastrous lesson for everybody. But take it for what it is, and don't let that take you out here. Bitcoin is a very important technology in everything that's happening in the world right now. And don't let this, take you out of understanding there is a recovery from here.
Well said. Well said, Simon. It all comes down to purpose and family. If we have those 2 things, I think we'll just be okay. All right, my man. I couldn't have said it better. Let's jump into the users' questions that people put forth from Slido, and we'll wrap this up. And again, this is, before I go on, Simon, that was great. That was fantastic. This is why we get along, man, because my rules that I have for myself and the things you just talk about, they align. And there's a reason why I have certain people on my channel, and there's a reason why I don't have others on my channel. So thanks. I do appreciate you a lot. So let's get to these questions. Let me bring this up real quick. Okay, my man, here we go. Here's the first one. And of course, this is from Slido. And we had, these aren't just questions I made up. This is from the community, and then people could upvote. And here's the top ones that we got. First one. Most depositors don't want compensation in fiat or company equity. We want our crypto returned in kind, even if that means overtime. And I think we talked about this, but can you make this happen? It sounds like we can. Just to clarify, what do you got with this one, Simon?
Yeah, if Celsius is illiquid, then we just hold out and wait. If it's insolvent, then you're getting a haircut. What happens to that haircut is either going to be a bail-in through equity. It's either going to be a bailout from some other world that invests, in which case they might want to make a predatory offer, or it's going to be liquidation and TradFi solutions that may give you the worst outcome based upon the market conditions. So if it's insolvent, fine. But if it is, if it's illiquid, then fine, wait. If it's insolvent, you got no choice. You are where you are. You've made the investment decision. Now we need to suck it up and come up with the best solution.
Yeah, that is perfect. Unfortunately, people don't want to hear that, but that is the truth. And I think you've got your options here. We just talked, and this is why we went through the history. We can go through the Mt. Gox way, wait 8 years and still be waiting, or we go through the Bitfinex way and a hybrid of some sort. So that would take care of the first question. Now, Azad, if you could do me a favor, fast forward to the next question that we had, or our second biggest question that came up. And this is a good one. I would prefer to be patient. And I got to tell you, I'm the same way, and get 100% back. Or in some cases, like in Bitfinex, they got even more if they invested in the security. Then demand the cryptos now and get a 30% haircut. Is the former possible option? I'm just going to say yes. Am I wrong here? Yes, we are.
So same answer. And again, patience is my preferred option. All the cryptos there, I get exactly what I put in back, and I'm happy to wait. That's my fine option with that.
Perfect. Yeah.
Whether it is an option is the question.
Yeah, whether it's an option. But people on my channel, they're pretty much in line with us. It's a 3, 5, 10-year game plan, dollar cost average for the long term. So I think this comes as no surprise to people from here. All right, Azad, next one, please. We'll just go down the line from the most requested and go down. So we talked about this one. But this is a good question, though. How bad is it, liquidity gap, insolvency, and why the silence? I think that is a bigger question. It is unnerving. Remember when Ledger came out and they said that they had a data leak, not a hack, a data leak, and they waited and waited and waited. I thought it was the worst thing they could have done. They should have got out in front of it. They would have no reputation damage, and people wouldn't even think about it right now. It's all how you act, and that's leadership. So Simon, what's going on here? Why the silence? Why do you think it is? And not that you can say what it is because you're not you're not privy to that information, but the things that you could say might be.
My speculation, I think with every ounce of his body, Alex would like to be saying things,
Sure.
but he's scared. I think he'd like to be doing the AMA. I think he'd like to be on this hot seat. He won't like some of the questions, but unfortunately, some of the things that Alex has said over the years has also got him in trouble because, at Bank to the Future, unfortunately, I've always listened to our advisors. I've taken my advisors as supporting me. We've had to make decisions sometimes of when you take risk, when you don't take risk. But I've always respected the regulations because I knew that would be the thing that would unfold you or make or break you in the end. There are certain things that Alex has said over the years that I don't think were right. Maybe he's learning his lessons. But I do believe that Alex, with every ounce in his body, would much rather be here on an AMA taking those hard questions, but he just simply can't because he's in a situation where what he says will be, have massive, massive consequences for either himself, the company, and his advisors will be saying, don't say anything. That's just the reality.
Yeah, I gotta agree. I think he'd like to be here. I think he can't be here. I'm pretty sure the lawyers, I'm pretty sure he's consulting, or like, do not go on any AMAs because what you say can be used against you, so on and so forth. I think we all know that one. All right, Azad, the next one for these questions. So this is good. Why does Celsius keep paying rewards instead of using these funds to help bail themselves out? And I will say this, I still get the emails too. Like, hey, just so you know, you made whatever, $10 this week. And the question is I think the emails go out, but it's still in the account. I don't believe you can take those out anyhow. But what would that be an option, Simon? You could look at and go, hey, we're not going to pay any of the yield out, but we're going to use that to bail ourselves out.
Yeah. So my speculation, firstly, is those yields are just database entries. They're not. There's those are just increasing people's balances, and it's just simply a database entry. The system was built to do that every week based upon certain parameters. And I believe if you look at the way Alex dealt with this one, he was fighting till the end. He was telling people things are okay right until they weren't, until the lawyer said or whoever said we've got to stop deposits. Now I think we're in the same scenario where he wants to pay until he can no longer. But personally, I believe that you're just making the liability worse. That needs to be stopped. And maybe it's a technical issue, or it's just, but I don't place much weight on what those are. It sounds like it's the board wanting to be in business as usual and put together a recovery plan. Yeah. Versus if you're in bankruptcy, those are just going to go. And I think my speculation is there's an internal fight there around what they should be doing. But yeah, to me, it's just a database entry and it's pretty meaningless, but it's increasing the liability.
Yeah, I'm pretty sure somebody from Celsius is listening to this stream. Okay, next one. What's your projected timeline for Celsius to reach a resolution on the scenarios that have been speculated on by the public? Bankruptcy, buyout, your plan. Again, this really comes down to the 3 different proposals, and if they go for those proposals, Simon, I'll ask you this: what's the fastest resolution here that we can get to? Because I don't see a resolution coming quicker than months coming down the pipe. Am I wrong here?
Yeah, so Bitfinex was 9 months to recovery. If they started moving exactly like Bitfinex, you can imagine a 9-month scenario. Okay. You need transparency on these contracts. There's external factors at force, like when does Ethereum move to proof of stake? I was original investor in the Ethereum ICO, and they said in the ICO paper that within 1 year they would be proof of stake. They're still not proof of stake.
No way.
Yeah, it was the original promise is 1 year to proof of stake.
Oh my God.
In the white paper. Yeah.
Okay, I'm gonna take that snippet for my next show. Great, thanks. That's crazy.
So yeah, there's external forces here. It's about understanding the assets. It's what is the regulatory situation? What is the financial situation? What is the recovery plan? These are decisive moves, and at best case scenario, this Bitfinex was recovered in 9 months. Worst case scenario, Mt. Gox is still going on after 8 years.
There's your choices. Okay, makes a lot of sense. Next one. How does a community get a board seat to represent an interest in the event an agreement is reached? This will be an interesting speculation here.
Yeah, so most lawyers are advising people trying to leave an insolvent company as a board member. The taking on a board seat at Celsius is assuming all of the liability for actions that you did not take. No lawyer advised that, and my lawyer certainly didn't advise me of that. Whether there is an independent committee and there's a board seat, then as long as and that's why I'd said I think I'm better off as an external depositor and external shareholder than taking that internal position, because at the end of the day, the last director is the one that holds all the bags, all the liabilities and all the responsibilities. I don't know many people that would want to take that no matter how much money is on the line.
Yeah, I would pass on that one. And then also, before we move on, Simon, you are using those headphones. Want to make sure that the battery isn't running out. We could switch over at some point, but I want to remind you, and you can check that out as I talk about this real quick. As a reminder, for voice, to have your voice heard, remember, there's a link in the description, bankthefuture.co/Celsius. Again, just use the link. It'll tell you exactly what the proposals were that we just talked about as a refresher. Talk about your opinions, the actions they've taken so far, and then, hold on, is this a duplicate? Hold 3 beliefs. Belief 1, 2, 3. It's pretty good. We didn't cover this. This is pretty interesting. We believe all attempts should be made to make depositors whole in order to maintain shareholder value. Belief number 2, we believe that TradFi may seek to profit. Predatory lending from depositors' losses may take too long and may lack. And 3, we believe the business as usual will not exist in the yield market in the future. I got to agree with you there. Again, make your voice heard. You get to vote. You get to be a part of this process. And for Pete's sakes, let's not let TradFi bail us out. And we go from there. So make your voices heard. All right. Simon, how are we doing on the battery life? We doing okay? Or
Yeah, I think it's still saying 20% because I'm charging at the same time as it draining down. So I'll carry on until I'll carry on until you're ready to go, or we lose it back, or we lose it.
Nice. Okay. There's now next big question. How will treatment of assets in 1, earn account, 2, loan collateral, and 3, custody account differ, if at all, in the various possible scenarios? Because if you're not, this was a United States issue, I believe. If you weren't a accredited investor after April 15th, you got put into what was an earn account, or an earn account after or before April 15th, and then you could transfer it over to a custody account if you wanted to, or if you weren't a accredited investor past April 15th, everything would just be in custody, and that was just one of the provisions that they dealt with as they were talking with different regulators. So, as you have, I don't know if Simon can answer this, because if you have an earn account, that's a different thing as it earns, or in a custody type of account. I don't think it's going to make a difference as far as speed of getting our funds back, especially with these provisions. Simon, am I wrong there?
Yes, this is more of a lawyer question, and this is the type of question I'd ask my lawyer. But these terms should not be thrown around lightly. So, at Banks of the Future, we're a securities business. We're applying for a virtual asset service provider custody license, an investment banking license, and a retail securities license. Just saying something is a custody solution has real meaning. So, this is why these terms shouldn't be thrown around loosely. Custody means that those assets are, put in some kind of trust account, and they're legally segregated from other assets. They can't be invested. And so, this is the unwinding process of, these are very important questions, and these are very lawyer nuancey questions. If you call something custody, it needs to be treated as custody. If you are leveraging people's assets, it needs to be treated as a bank. If it's an investment, it needs to be treated as a security. If it's interest, then, these are very important questions, and these terms should not be thrown around loosely, and they all have different legal implications. Just like depositors would be considered creditors, debt normally supersedes equity. Tokens have no rights. These are very important lessons that you've got to become a lot wiser investor when you understand the difference between, why I'm an equity investor, why I'm not, versus investing in tokens and various other things. So let's take the education out of this. There's going to be a lot of learnings, and it will make you a better investor. But, I can't give you legal advice on that. These are lawyer questions. Yeah,
but it's still a good answer. It all comes down to education and just making the best decision for you. Next one. Azad, if you would be so kind. Thank you. Please explain how Celsius can prevent a bank run if it opens withdrawals. And this would be a pretty good scenario. So we get everything out and we start to open, but there's no way they could open everything up and go, okay, now we're ready for business. It would have to be a slow process.
Yeah, so they need to say, oh, excuse me, my voice is going now. Let me get some water.
Sure. Take your time. We got time.
Oh, my passion is bigger than my voice at the moment.
Yeah, man.
So this is a risk management question. It's what assets are liquid, and then you open up withdrawals for those amount. This is just a number crunching game. It requires taking step of what the financial situation is. and releasing withdrawals based upon the maximum exposure of what is liquid and what's invested, what's uninvested. And so unwind a position, have it as liquid, and then take the maximum exposure, allow withdrawals to open, and then when the next position comes through, and you gradually do it that way.
Yeah, percentages. It has to be percentages. There's no way they can open everything and go, okay, have fun. It's just not going to work like that. But I will say this, from the message that I got recently, the big thing was, I don't care if I have to wait. I don't care if they don't pay me yield. I just want my life savings back at some point. And I got to tell you, I think this is one of those paths to go forward. All right. So next one. In the Bitfinex video that you have shared, some depositors lost 25% of their assets with your counsel. Do you expect a similar outcome for Celsius depositors if we go for this type of recovery plan over here?
Yeah, so the reason that I loved the Bitfinex scenario is because it was very free market driven.
Right.
If you wanted to take a loss, you could. If you just said, get me the hell out, I want to recover, you would have made a little loss. Those that wanted to profit from that speculation were able to profit from that speculation. And those that just hodled all the way made the most amount of money. And so I'm not saying that will happen again. But the choice between dumping a token, converting to equity, trying to recover what you may have lost by buying tokens cheaper, or just holding off on the debt. Those are all decisions, and you can diversify accordingly. You could say, I want 33% of my risk here, 33 there, 33 there, and you can play a risk management game accordingly. But the reason that I like that solution is because there's a big problem in making decisions for people. If you make those decisions wrong, you're legally liable for those. But if you allow people to make their own decisions, while they may not be happy with the situation, they made their own decisions, and with hindsight, they can learn.
Yeah, I learned. I mean, look, I learned the hard way in 2017 when I went in heavy, when John McAfee told me Bitcoin was going to $1 million. I couldn't believe he'd lie to me. So, all it took was just a little bit of time of dollar cost averaging. But that was just my plan. Doesn't work for everybody, but dollar cost average, that's what we got. So next one. In the event of bankruptcy, which would be, I think, one of the worst case scenarios. In the event of bankruptcy, what creditors and dollar amounts stand in line ahead of the depositors? Who gets paid first? Will shareholders get anything if depositors are not made whole? See, this is a question I'm not sure we can get into, because this will be, it depends on, how this all plays out. But anything with this one, Simon?
Yeah. So again, a lawyer question, and I'm not a lawyer.
Yeah.
But from experience, it would seem to me, maybe, that depositors and creditors would become before shareholders, and shareholders would become before token holders. And so really, if you go down that line, this is why my hashtag depositors first is, let's see if we can make depositors whole. If we can, then there's probably some shareholder value. And if there's some shareholder value, then the company may be able to do something with the token.
Gotcha.
Yeah.
That makes sense. Now this one's interesting. This is just theories, unfortunately. Why do you believe other CeFi platforms, like a BlockFi, like a Voyager, ever seen backing for liquidity from the likes of FTX or Alameda Research, but Celsius is struggling to find the same support? Why isn't there internal bailouts being offered this way? And this would just be speculation. Nobody has any idea exactly why that is. But any comments on this one that you can say, Simon?
Yeah, I am privy to lots of behind-the-scenes conversations. Motivations are driven by many different factors. And my speculation on this is that I think Alex's and AMAs used a strategy of getting one up on the competition by slagging off the competition. I think that's coming back to bite him. I personally have tried to make as little enemies over my time, but just in the day-to-day of doing business, sometimes you can't help but make enemies. But I do think Alex was particularly antagonistic, and there's certain enemies that were made. There is also conspiracy theories that at the end of the day, just follow the money. I'm writing my new book on money, and all I'm doing is following the money around the world, the IMF and all these different flows, and you can figure out the answers to crimes, wars, everything.
Oh,
And that is what I was doing. My whole book is on following the money to kind of unwind the last few 5,000 years of monetary history to predict the future. You know, 3 AC, you know, blew up. Luna blew up.
yeah.
Decisions were made. Certain pacts were formed.
Yep.
Some people decided to break those pacts, and the politics of those decisions would have formed alliances and not alliances. And whether Alex made the right decisions or wrong decisions is very hard to know at the time. He may have been trying to protect his depositors and get Luna out as fast as possible.
True.
He may have actually broken a pact, which then led to a coordinated attack and speculative tools and all sorts of stuff. You create your conspiracy theories, and they're very interesting. And follow the money, and you can get a lot of answers. And that's the beauty of blockchain. There's a lot of answers there, and the whole community giving those answers. You know, we can speculate on those, but here's my thing. I just said I don't give a shit about any of that. I don't care about short squeezes. I don't care about trading. That's not my game. You guys play that game.
Yeah.
We need to move fast. Here's solutions. Here's what I can do. Here's the influence that I have. Here's what I would do if it was me. Do you want to do it? If you're not going to do it, here's another plan. And we need to, you know, if that's not working, then we'll carry on till the end until something does work. And if the end is that we lose all our money, Goldman Sachs owns everything, then we come back to tell the story. And everybody, you know, learns and karma plays its role. There's consequences to everybody's actions, and hopefully everybody did things with the best intent, and that will be the price that they pay in the end.
Sweet, Mary Joseph. Do not let DeFi, or excuse me, TradFi bail us out. Oof. Okay, next one is we'll move a little bit farther down the line as we get these questions up. Let's see. Little delay, sorry, but let me bring this down. Oh, how about I just pull this up? Okay. Oh, this is good. You stated that you would reach out to CZ from Binance, CEO of Binance. What can you say about that interaction, if anything, and the potentiality for Binance to assist Celsius with liquidity? Is that anything that's come down the pipe and you guys have talked about? Or can you even talk about that?
Conversations have been had. There's things that are happening that I can't talk about. That's all I can say.
Yeah. I'm not going to push that question, but I know the answer. All right. We'll get to the next one. Azad, next one, please. Perfect. Are Celsius international customers, Middle East, treated as US, Euro, UK citizens in their bankruptcy restructure claims? So again, I don't think this will be a lawyer question again. And if this even goes down to that bankruptcy option, I personally think that's the worst option. But Simon, anything on this one?
Yeah, don't know the answer. Lawyer question. But in most companies, including Bank to the Future, US and non-US are treated slightly differently. In order to comply with US securities laws, which is the current empire that's backed by the most military expenditure and therefore has the most power and often comes up with the most mafia-like solutions when regulating.
That sounds like a country I know. Hey, when is that book coming out that you just talked about?
I promised to get it out by the end of the year, but this really set me back. I'm writing the book. I'm sorry to talk about my book, but it's the most exciting book I've written. I've learned a lot just through writing this book, and I think Following the Money is going to educate a lot of people on a lot of things that are very confusing to a lot of people at the moment. And my book a decade ago did get a lot of things right, and I think we can look at the next decade as well.
All I can say, Simon, is stay safe until you can come back on the show and talk about the book. All right. So next question. Do you believe Celsius will be liquidated on any of its current loans? Does it have the assets to add collateral if necessary? And, I've had loans myself that have been liquidated from Celsius themselves. But what about the Celsius loans as far as liquidation? I guess it would come down to, how they want to start restructuring, I believe. Simon, what do you got?
Yeah, these are all finance questions. If I was privy to the finances, I could probably answer those questions. A lot of people are doing amazing analysis, looking at the blockchain, understanding, I'm learning from the community that that are releasing addresses and stuff. I'm learning from you just as much as you're learning from me. So this is a community effort. There's no way that I can keep up with this at the pace at which it's moving if it wasn't for Twitter and everybody doing their own due diligence and their own skill set. And that's what I encourage everybody to do. If you have a particular skill set, then apply it to whatever it is, your solution, whether it's, whatever your solution is, whatever value that you can bring it to the table. It's adding value. There's certain things that I just simply do not have the time to look at. And I'm seeing some amazing analysis from the community that are reverse engineering blockchains and all sorts of stuff and educating me at the same time so that we all have better information. At the same time, there are people that are using information as a weapon in order to serve other agendas. So we also have to be hyper aware that there is fake news out there. There are competing agendas.
Right.
And a lot of people are taking advantage of these situations. The reason I wanted to go live is that, at least make an opinion about me. You either think I'm here predatory, trying to, and you're entitled to that view, but I wanted to come on camera. At least you can have an opinion about whether I'm here for the right reasons or the wrong reasons. I'm just saying it as it is, my current situation. And I'm trying to protect my deposits, protect my shareholding. And I'm trying to use my influence to do what I think is right. I may get it wrong, but I just want to add value in the way that I can, and you should do the same.
Perfect. Sounds good. Sounds great. So let's go to, and then of course, remember everybody, if you want to have your voice heard and talk about, because Simon just told you, I mean, there's some great, smart people out there. Give us your information or your thoughts on this whole process. Again, link in the description at bnktothefuture.com/Celsius. Link in the description. All right. So next one. And this is, well, you've already talked about this. Has anyone?
Yeah, sorry. I just want to say a few things on web domains. If you go to the Bank to the Future terms and conditions, we have banktothefuture.com, banktothefuture.com, and banktothefuture.co. But there's going to be a bunch of people creating phishing sites. If you go to the terms and conditions, we list all of the domains that are official on banktothefuture.com. Unfortunately, it's very confusing because bank is a sensitive word. And so over our time, we've had to make changes. But just go to the terms and conditions and you can find the list of the domains that are official, because there's going to be a bunch of scammers that are going to try and, scam you and create all sorts of weird websites. We have people create fake websites of us all the time. So just wanted to say that.
Yeah. Or you know what? Make it even, this is what I tell people. Don't do like a Google search and things like that, Bank to the Future, because that's when the phishing sites come up. Just go to people that you hopefully trust. And that would be somebody like myself on the YouTube channel. Let me bring something up. Hold on. This is the best way to do stuff. Let's take this one. Whoa. So if you go to any of my videos, any of them, scroll all the way down. There's these people that I watch all the time, YouTube channel recommendations. And there's Simon Dixon. If you click on Simon Dixon's YouTube, you can find all the links that you want to know to his Twitter account, to Bank of the Future, and everything else. So just follow the easy parts. Also, there's a link in the description that I have Bank of the Future and also his Twitter account. So hopefully that makes sense. All right. So I think we talked about this already. Why do you believe that Celsius has been so quiet? Silence has already broken the trust of the community. Was it worth it? I think we know the answer to that one. Next one. Again, I think this is a banking question. Could pausing rewards for all users help Celsius use that money to further pay down off their positions, reducing exposure, prevent liquidations? That would be a financial question, perhaps. Anything with that one?
Yeah, I mean, I'd stop. If it were me, I'd stop rewards right away.
Yeah. And then Azad, next one. And Azad pulls new ones. I want to pull one from the comments as well.
Yeah.
This, I think we talked about. We can only speculate, right? We can't say anything because we don't know. Do you believe that Celsius was attacked by bad actors or mismanaged or both? I will tell you this. I've never seen so much FUD and so much polarizing views come out than Celsius especially on Twitter. Simon, did you see the same things or different?
Yeah, I think both, right? You're easy to attack if you've got something to hide, and every business has got something to hide, right? No business has done anything perfectly. That's just a fact. I'm a shareholder in 100 of them, and everybody's got dirty washing, and so do you, and everyone that's watching this has got something that they've done wrong that they're trying to learn and they're trying to recover from. But the reality is that I believe that both has happened. I think Celsius have done some things wrong. And I think competition and bad actors have tried to expose that. And I think both is happening.
Got to agree. Okay, next one. Why do you believe Celsius has decided to remain quiet? I think we talked about this already. Next one.
Have you got a live chat at the same time, Rob, as well? Or
yeah, I do.
Are we live on YouTube at the same time? What's the live chat like? Is it going crazy?
We've only got about 4,000 people or so. But
oh shit.
So this is from my man, First Coast Crypto. He said, wait a minute, Rob said never trust anyone. Exactly. Everything's a scam until proven otherwise. So don't even trust me. And don't even trust Simon. Everything that we talk about, you have to verify yourself. And I think if you do stuff like that, you'll be in a much better position because then everything's a scam. Even your mom texts you and said, what's your Coinbase password? It's a scam. So just go from there. And I think you'll be okay. And we got this one from CKJs. Hope some of y'all learned your lesson. Those crazy high yields aren't sustainable. I think what Simon talked about, it comes down to education. And this is one of those things where, Simon, I had to tell you something. It really came down to what you said there, where you said peer-to-peer. And you talked about, you go, look, if you're taking Bitcoin and you give it to somebody and they rehypothecate and they can loan it out, that's one thing. But if you're doing fractionalized shares without collateralization, that's fractionalized lending essentially. And that's not what we signed up for. But here we are, if that is essentially what it is. I think there's a big distinction there. Let's take a look here. Also, get off the centralized exchanges, use DEXs instead. All right. Any other questions we have? How long before we hear from the board? Again, that could take a while, and I think Simon's already talked about that. What do we have over here? When Lambo? That's a good question, Simon. When are we going to get that Lambo?
I tell you what, if you put together a 10-year plan, I actually believe that anybody can have a Lambo. If you try and get it within 1 year, I guarantee you're going to get scammed. You're going to trade. You're going to make tax mistakes. You're going to create liabilities, and you're going to try and get it too fast. And I know people that have got a Lambo within 1 year, and that can't afford a Lambo during the crash. And so, if you want a Lambo, I've got no problem with that. But put together a longer term plan, and be prepared for all outcomes. And I've always said, be ready for inflation, be ready for deflation, ready for economic growth, be ready for economic decline, be ready for a war, be ready for a pandemic, be ready for a bank failure and financial crisis, be ready for real estate crashes, be ready for stock market crashes, be ready for Bitcoin crashes, be ready to take advantage of the wider crypto markets. And this is really, making sure that you're ready for outcome. And then you can relax. You don't need to there's a lot of people that aren't relaxing right now because they said, I'm putting everything in Celsius. And I'm not here to rub your face in that. That really is not my intention. I've made bad, sometimes kicking someone when they're down is the worst thing. And I wish, I'm conflicted with these things. Sometimes I just wish that people could be more empathic. But at the same time, it's, this ruthless accountability that's also made the crypto market and Bitcoin what it is today, because we're ruthlessly holding accountability here. I don't know the answers to that, but somewhere in the middle, there is what feels right, and I really hope that people learn from this. But it still just doesn't feel right to me to say, well, you shouldn't have done that. Of course, you shouldn't have done that. That's obvious right now. People are suffering. If everybody knew what to do, then they would have started mining Bitcoin on a laptop. Then they would have converted it all to the Ethereum ICO. And then before the crash, they would have put it in Tether. and then they would have taken all of their tethers and buy Binance tokens, and then they would have taken their Binance tokens and they would have bought Bitcoin,
Yeah.
and then you'd be a trillionaire, okay, and you'd own the whole thing.
You don't know. Yeah. That's a great one. I'm going to use that one. I'm going to steal that. Simon, before we go on, tell us about what it was like in 2000, because you got it in 2010, right? 2010, 2011, Bitcoin, trying to, start up your own bank. What was it like back then to just to get a Bitcoin? I mean, it's got to be.
Yeah, well, I spent in the first Bitcoin conference, I spent a Bitcoin on a Mars bar.
Get out of here.
At a hacked together ATM machine that we actually, after the Bitcoin conference, this special code to go to a hackathon. And you had to go all around Czech Republic and these really shady things that I can only describe as crack dens. And eventually, if you did a secret knock and got the right text message, you ended up in this hackathon. And there was a bunch of people with anonymous masks and a Bitcoin ATM where they were selling Mars bars. And I thought it would be fun to buy a Mars bar in this Bitcoin ATM.
Unbelievable.
This is the post-conference, because that's what the community was back then. It was us versus the banks. It was a movement towards providing financial freedom that we knew we were going to be attacked in really big ways. And it just felt like this insurmountable task, but we accidentally succeeded and Bitcoin was created. But yeah, buying Bitcoins back then was a disaster. I mean, I bought some Casasius coins.
What's that?
And I had these physical Bitcoins that you often see as the... It had five Bitcoins in this physical Bitcoin with a hologram on the back.
No way.
And quite frankly, Mt. Gox was just the easiest place to store your Bitcoin. And then you had to figure out how to download these wallets. You'd had, very few. And then Mike Hearn started creating the first apps, the Bitcoin wallet. And then Apple banned all apps and said, we're not supporting this. And, it was a nightmare. It was really, really hard. And what you got today is really luxury compared to what we had back then. And then you have paper wallets instead of hardware wallets.
That's right.
At the first Bitcoin conference, Trezor was there and they were actually sponsoring the conference and they were trying to create this hardware wallet. And that was, a major, major breakthrough when that came out.
Did everybody call it a scam? Like, they're trying to steal my Bitcoin, this hardware wallet. Doesn't make sense.
Yeah, no, and that is the default position, right? Everything's a scam until proven otherwise. And because everyone wants your private key and eventually, yeah, of course it was a scam.
Of course. So, you know what? I mean, just we'll get to the questions in a second, but think of it this way. Like you talked about Bitfinex and the actual, what was it? 70, 80 million. And it was like the biggest hack of all time at that point. And of course, Mt. Gox before that, but Bitfinex was this big thing. And now today we're talking about with Celsius, 8 billion, 10 billion or somewhere that's just sitting there. What's going to happen in the next 5-10 years? People are going to watch this video and they'll be like, can you believe that? They're talking about just $10 billion when we're at a multi, 12, and I can't say what it's going to be, but I will just remind everybody, if you take a look at all the world's money and markets and the visualization, this was just a year ago. And all these little squares are $100 billion. $100 billion. Here's military spending, U.S. budgets, coins and banknotes, Fed's balance sheet. I can tell you right now, that's way higher. Here's all the billionaires in the world: Zuckerberg, Bezos, Gates. I don't know about Zuckerberg anymore. Gold is 12 trillion now, Fortune 500. Stock markets is 100 trillion. The money supply, over 100 trillion. Global debt, 200 trillion. Global real estate, 280 trillion. And then you got derivatives, which is 1 quadrillion, which is a real number. I actually had to look that up. So if you take a look at all these things and we're saying to yourself, man, what are we at? $900 billion with what's going on. This in 5 years, I personally think isn't going to be much. All right. That's my little rant.
One thing I'd encourage, if you put in YouTube, Simon Dixon TEDx. I gave 2 TEDx talks. The first one was where it was during 2007. There was one where I was in Occupy London or something like that. And I was trying to describe to people these bailouts and the difference between, a million, a billion and a trillion in time. And I remember we were talking about RBS having this £23 million hole Yeah, it's the second one. The first
Right.
one came later.
Okay. 10 years ago.
Yeah, in 2000. There you go. Some of these videos. Look at that good-looking, younger, slimmer.
Look at that skinny kid.
Yeah. And shit, what happens then? Bitcoin happens. Yeah, this 23 million pound hole in Royal Bank of Scotland, which seemed like the biggest number in the world. You know, and these are just like normal hacks in the smart contract now. It's crazy how these numbers escalate. We have just we have lost all touch from reality, and you know, it's just crazy. You know, this is why I say we are alive at the most interesting time. It's really harmful for many. It's going to be really great for others. And you just got to get on the right side of this shit, because we need people that understand this stuff. And Bitcoin hugely progressed the conversation. I went to London School of Economics back in the day before Bitcoin, and I tried to tell people that banks created money. They chucked me out of the university for giving such a stupid talk when I was trying to describe that banks create money. I remember, like, even Burt you know, I went to the Independent Commission on Banking, where Sir John Vickers was presenting his finding on the 2007 financial crisis. And I was trying to explain, it's quite tragic actually. There was an MP in the UK that recently died called David Davies. He was actually murdered very tragically. But he was in charge of the whole banking in the UK politics. And none of these people understood banking. They thought I was crazy when I was explaining how money works. And when Bitcoin came along, it was like, yeah, I mean, it's obvious that banks create money. And now this conversations, the education that we have 10 years on is quite remarkable how well educated people are on the financial system. Back in these days, this was hard. And if Celsius gives everyone a good education, I'm really sorry. You know, I don't want to tell you, I know these numbers are big. You've got to recover from these. You've got to take forward. You've got to progressively rebuild. You can rebuild, and you've got to learn the lessons from that, no matter what happens. And I'll fight tooth and nail to try and get the best solution that I can for my deposits, and hopefully that helps your deposits.
Yeah, hopefully so. All right, well said. And here's something to be aware of for everybody. Scams, and this is Max Anderson. Thank you for a video. I agree completely with everything you said. I have become so rich after giving all my crypto to Scammer Sam. She has doubled my Bitcoins and tripled my Ethereums. Just letting you know, that's a scam. So if you're seeing stuff like this, this is ridiculous. Which leads me to the point I'd like to talk about real quick, which is over here. This question. I'm not sure if this is what it is, but is the HODL request legitimate from Celsius? If it helped, I would do it, but I'm not without confirmation. First of all, is this going around that Celsius is sending out emails or something to people to put on HODL status? The next question is, can you even get into your app? And the third question is, why would it even be a HODL status when that's essentially what's going on? You can't remove it anyhow. So I would just say that this is maybe a phishing attack, or I'm not even sure if this is a scam. But again, treat everything like a scam until proven otherwise. Just want to make that point.
Yeah, so there's speculation that by turning on HODL mode within your app, you're voting for what I believe to be the internal conflicts between what the board may want versus what TradFi may want. I don't know this to be true, but I have a pretty good source that this may have been. You know, you got to read between the lines a lot here right now. When things can't be said, you got to kind of imagine you're in that scenario and you're watching these videos. You know, Alex is watching this video, and it breaks his heart that he can't be here.
Oh, I'm sure.
Is my guess. You know, I think he placed a lot of emphasis on his reputation. You know, and you know. He's watching these things and he's trying to get certain messages out there that may be an internal conflict that he's not allowed to. It's going to get him in legal trouble. You know, these are tricky situations to be in. I'm not trying to say whether, you know, you want to empathize with him or not. I'm just trying to say these are the realities. And I do believe that apparently this putting on hodl mode is some kind of signal. And whether that's true or not, I don't know. But I've got it from a good source that might have been a message that was trying to get out without saying anything and making an official announcement.
Oh, there you go. Information from Simon. But don't trust Simon. Do your own research. All right.
Yeah, and also I just got to disclaim, whether you turn hodl mode on or not, I don't know whether that's going to be a legal complication later. So I'm not your lawyer. I'm not taking advice. This may cause loss if, I'm just sharing something. And, there's legal consequences to all of these decisions, which is why you've got to be very, very careful. It might change the classification of whether someone that has hodl mode or not I'm not saying it does, but it might legally be used as an argument as to why one creditor should get something over another creditor. So be ultra careful with these things.
Yeah.
You've got to get your own advice at the end of the day.
Yes, perfect. Here's a question that just came in from the chat. So I'll go to the Slido in a bit. Question: can you use the Celsius token from Treasury for Simon's option number 1? And if we take a look at real quick, proposal number 1, what we're talking about here is a restriction to relaunch Celsius and allow depositors to benefit from recovery through financial engineering. Involves risks and full recovery of funds not guaranteed. Simon, can we use Celsius token? And another thing is I was always under the, we did a video a while ago as the Celsius token. I thought, and we did a video on it. We took a look at the SEC filing. It was registered as a security itself. Am I off there?
Okay, 2 questions. Firstly, I would, if it were up to me, I would be very reluctant to use Cell token as part of the recovery plan. And the reason for that is because if there is a token, and you may not need a token, if there is a token, then it should be a security that represents debt and convertible into equity, is how I would suggest. And if you do that, you would make that token a security. And if that token is a security, then it cannot be listed on any exchange that is a cryptocurrency exchange that is not authorized in order to trade securities, which is pretty much everyone. Okay, so when people are asking for tokens to have burns and things, you're taking extreme risks. And this has been a bee in the bonnet that I've tried to share with people since before the 2017, that when you're turning these things into securities, it only really works for exchanges that are willing to list that token on their own exchange, because they're highly likely to be securities when you turn them into investment products like this. So I would be very skeptical against doing that. Now, in terms of shedding more light on my understanding of the token sale, there is an exemption from regulations called selling an all right. So when you sell a token, you can't allow the token to be a security, because otherwise it can't be traded on a cryptocurrency exchange. Mm-hmm. But you can sell an investment contract that gives you entitlement to that token. So during the 2017 ICO boom, we almost got disrupted because nobody was selling equity and everyone was buying tokens. And we created a way to compliantly sell tokens through using a security that gave you entitlement to the token. So the token wasn't a security, but the contract that you invested in. And then once you have a contract you can invest in, you can use certain exemptions. For example, Reg D allows you to sell it to accredited investors, not by getting approved, but by filing a form disclosing that you're selling it to accredited investors only. And this is a little play on, careful. Yeah. Approved means that if it was a Reg A plus, for example, you then give it to the SEC and they have to go through your prospectus, your disclosures, and no ICO was getting approved. There was only about 2 or 3 of them a lot later that managed to get through that. That's different from saying that you're only going to sell it to accredited investors and filing a Form D. That's not an approval. That's a disclosure to the SEC that you're doing it. So, you've got to be careful around how these languages are thrown around. And this is exactly why investor protections exist, because, when you're using language to make people think a certain protection is there when it's not, it's really questionable saying these things.
Yeah, gotcha. And then just an update from the question for Pojak. I turned on HODL mode the other night on the app. It sends a message to the board. I guess it'd just be like a signaling like we talked about. Okay, got it. And then moving back over to Slido, Nexo's buying out Celsius loans seemed like the perfect outcome for customers. Would we have all gotten our money back if Celsius accepted the offer? So let's say they didn't go this way. They went with, I guess, Nexo if they had that liquidity. What do you have to say about this one?
I'm under NDA with 3 different parties on that one.
Gotcha. Okay. That does make sense. Azad, next one, please. How would your plan convert debt into equity for non-accredited investors? What options are available? So if we're talking about securities and things like that, how would that work, especially in the US? This is a very tricky question, especially the United States and the SEC coming down, regulatory issues.
So at Bank to the Future, we can only work with high net worth investors, accredited investors. We're applying for additional licenses in order to work with non-accredited, non-high net worth. So there are 2 different options. One is that Bank to the Future has partners that are deeply integrated into our platform, that we could make sure that we get a certain structure that would comply with the regulations. You may not get all the same options as a high net worth or accredited investor. If in the future we secure those licenses, we can make different options available on our secondary markets and various other things. Or it can be that certain options are available to certain classifications of investors. These are all design decisions that could be put into the system. And then the high net worth investors could be able to take options for those that can't participate in certain securities offerings. This is where, Bank to the Future, for over a decade, we've integrated our identity system with securities laws all around the world, and this is kind of where we shine. We built technology for all different securities in all different jurisdictions, but there would be certain people that could, certain people that can't, and those are based upon the law. And where you can't, then we integrate with different brokers that can, is the answer.
Gotcha. Okay. So remember the 3 proposals: restructuring. Proposal number 2, pool the most influential whales. Number 3, operational plan allows a new entity to rebuild essentially the board of Celsius. So again, make your voices heard on the link in the description, banktothefuture.com/Celsius or BNK to the future. All right. Next Q. How would your plan convert debt into equity? Oh, no, we already talked about this.
That's the same one, right?
Yeah, same one, eh? And as we're going through that, well, I guess that'll be it. Is there a plan so small investors can get all their crypto back, for example? Users with less than a Bitcoin can get it all back in Bitcoin as opposed to equity. Again, this, I guess, will be just the different proposal that comes forward.
Yeah, you want to treat everybody the same. So whether you're a higher net worth or not, and then if you would have certain options that are available to those that can compliantly take those options.
Gotcha. And then someone who said that Celsius, where are we? Someone said, oh, Celsius put on an update. I was okay. So I took a look at their Twitter account, and this is operating with your entire community and all clients in mind. We continue to take steps to preserve or protect assets and explore the options. Okay. This is going to say the same thing, I'm pretty sure.
That's a new one live as we're speaking.
As we're speaking. Is that June 30th? June 30th.
Yeah, that's today.
We continue to take important steps. Our relationship with the community. That's it. Really what it says is, across sales, we're focusing on working in order to be positioned to share more information. We are operating with the entire community and all clients. We continue to take important steps. These options include pursuing strategic transactions, as well as a restructuring of our liabilities, among other avenues. These exhaustive explorations are complex and take time. We want the community to know that our teams are working with experts from many different disciplines. Our relationship with the community and our clients has been a source of pride for all team members at Celsius. We will continue to share information with our customers. That's pretty much long and the short of it. Okay.
Yeah, don't expect anything more until there is a conclusive plan that's voted upon by the board. And this is where, at at Bank to the Future, we do own over 5% of Celsius. And don't take this as legal advice, but my lawyers have told me that that gives you a statutory right in order to call a shareholder meeting. And so once we've got all the feedback in and we understand how the community wants to take this, we do have the right to call a shareholder meeting, and we do have relationships, for example, with other shareholders. So we did the Bitfinex recovery plan. We're a shareholder in Bitfinex. Tether is an investor. So we could pool our vote as well. And so this is why I'm trying to get creative around using the influence that we have in order to make sure that the crypto solutions get a fair vote next to the TradFi solutions. And, you know, there's a lot of legal gymnastics in that. And so, you know, because we're in a unique position, that's why I'm here, and that's why we're doing this. And that's why we want to hear from you. Yeah.
That's it. And then I'm looking through, we're seeing a lot of the same questions over, but we've already answered most of these. Like, do you have a timeline for when depositors can withdraw? We don't. This all comes down to the proposals, which one gets taken up first. Are you in active discussions with Celsius? How are they going to working with Bank of the Future? I think we already talked about this. There's some ongoing discussions, but you've signed an NDA already, so you can't really discuss it. Non-disclosure agreements. Let's take a look at the next one. Maybe that's it. Yeah. We are coming up on 2 hours.
Wow, is that what we've done? Okay.
Yeah, and you didn't even, I mean, your voice didn't crack after that first lozenge. Amazing.
Yeah, I tend to, there's something about disaster in an industry that I deeply care about that tends to pull me into a lot of energy. Yeah, so, you know, I feel we have certain purposes in life, and I feel like doing what I can in order to support Bitcoin's growth. Remember, these are all cycles. We have recovered from all of these cycles, and you are either going to participate in those recoveries or you're not going to participate in those recoveries. You need to make a real decision about how you react from here. And I am very empathic for people that have really got in beyond what they thought they were getting into. We've seen, we've seen scams after scams after scams and all sorts of stuff. We've seen people that have just got themselves in positions that they never imagined. Sometimes you end up in a scam accidentally. Sometimes Mt. Gox just bought an exchange off the founder of Ripple that had 80,000 Bitcoin missing that wasn't disclosed to them, and accidentally ended up in a Ponzi scheme. This is the world that we live in today. And this is the game. And so the only way you can protect yourself is with effective diversification to protect from scenarios that you can't imagine this happen. And there's always surprises in this market. And that's just comes with part of the territory of reinventing the future of finance and providing an exit from traditional finance, which is one of the most powerful vested interests in crony capitalism, deeply entrenched in some of the biggest interests in military and government that the world has ever seen. And if you think that they're just going to stand by and watch us without having incredible bumps in the roadmap and speculative attacks and all sorts of stuff, then you're deeply ignorant, but you're going to either decide to carry along and be there. And there's nothing more exciting that I've seen than the day that Bitcoin came along and gave people the biggest education in owning your own money, spending your own money, and the importance of having a fixed supply and all the pleasures and beauties that come with that, and all the scams that come along and all the problems that come along on this journey to reinventing the future of finance.
Exactly. Well said, Simon. And nobody said it was going to be easy. If it was easy, everybody would have done it. All right. So let's wrap this up. I think that was a great segue to get out of here. Simon, I want to say from everybody, thanks so much. I appreciate you. I think a lot of people appreciate you taking the time to work for the community to get to a resolution in some way, shape, or form. And hey, if it's not one that you put forth, that's what we talk about. Make your voices heard and come up with something else. But I think this is the big issue, and I'm glad we could all come together and try to figure it out together, as opposed to having some other TradFi bail us out. So Simon, thanks so much. We all appreciate it.
Okay, and awesome for all the work you've done, Rob. I think you've got a very pragmatic way. I think you're educating people in a good way, and I think you're willing to learn at the same time as educating people. And I think the education is the most important thing that comes out of this, because when you're more educated, you make better investment decisions, and that's what you've got to get out of this. No matter what happens, take responsibility, even when it's not your own fault. Learn from it, and you'll move forwards, and you'll press on, and you'll be a soldier for whatever happens.
I like that. All right, everybody. So if you like today's video, thumbs up, subscribe, all that good stuff. And that is it. You can find those links in the description. Also, you can check out Simon on his YouTube channel. Also, check him out on Twitter. He's very prolific as he gives you updates. That's it for today. So everybody, thanks so much for stopping by. We do appreciate it. We'll see you on the next one.
Bye-bye.